Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the product development process, that is chapter number 6 from the module B of RBWM. And if you are preparing for the same, do watch our complete videos where we'll be covering each and every concept and comprehensive manner so that you can clear the exam in the very first attempt. So on simply on sign up, you'll be getting access to all the PDFs. So do sign up right now. Visit the website iibf.info, and further just do navigate to Jaiib, sign up over there, and simply on sign up you'll be getting access to all the PDFs over there. And you can also be enrolling into courses where you'll be getting the full course videos, case study videos, chapter wise professor questions, mock test, mega mock test. Each and everything will be covered, and further very neatly and very cleanly each and everything will be covered. So do follow the videos and start preparing for the same. So let's start the session over here, and it's related to the product development process. Let me just load the file for you. So it's actually related to the product development process. Whenever new product is to be launched, how it is to be launched over there. So when we are talking about the product, it's actually related to anything that is actually providing the satisfaction, and further which can be used by the consumer over there, by the customer over there, and further which is in return required by the customer or desired by the customer over there, that is said to be the product. And when we are talking about the product life cycle, that product actually passes through and goes through particular different stages, like when it is introduced in the market, that is an introduction stage, and further then there is a growth stage when it will be developing and further growing, and after that there is maturity and for the saturation stage over there, then further in last it will be declining. You can be looking at the graph over here. So in the introduction stage, we can be finding that particular sales level is quite low. People are not aware related to our product. We have not particularly created the awareness level of the product related to it. We are not profitable at that particular part over there. It may be the case we may not be able to cover each and every cost related to the product over there. And after that, we basically hired the influencers or the digital marketers, and particularly people went for our product, they bought our product, and that was the growth stage when they are actually using our products, and our sales went up, and further there was surge in sales, surge in profits over there, and ultimately the product maturity period was there. Let's say case some other competitors also entered, they there were new products, the technology changed, and for that maybe the case the saturation level is there, that you're not able to basically peak above that particular thing. That let's say case my previous sale was 100 crore, now it is basically saturated to 100 crore. I'm not able to went beyond that particular sales, and further in fact my sales are now declining. Even I have spent a lot of or hefty amount on the advertisement over there, still I'm not able to basically increase my sales, and there is decrease in sales over there, and that's a maturity stage. And after that it's related to declining stage over there, where your product actually does require a revamp, where you need to redo the product over there. You need to basically modify the product so that the saturation stage can be maintained, so this particular maturity stage can be elongated, right? So we'll be covering each and stage basically. So first of all, it's related to introduction stage. Like I told you, in introduction stage people are not aware of your product, so you may not be able to cover even each and every cost related to it. And further it's the entry level of the product over there, so definitely it's not in the mind of the consumer, right? The second stage, it's related to growth stage over there. Now your particular sales volume picks up, and further you may be reaching up your break even. Now break even is actually related to that point where you are able to basically cover all of your costs, right? And further you'll start making profits, right? And further the product will be in particularly in the minds of the consumer. Now there are repeated customers also who are coming again back to you. That's a growth stage. And the third stage, it's related to maturity stage. Now particularly there is more growth and more increased sales over there. Volume peaks, sales volume peaks over there. Peaks means that's a maximum part is reached, that's a saturation point is over there. And further you're having a wider consumer base, and further you can be maximizing your results by offering them some good thing, and further there is good inflow over there, right? And after that it's the final stage, that's the decline stage. Now at the decline stage, now your product it seems not to be very much attractive to the customers. As I told you, it may be the case that your energy your particular product eloped, or it may be the case that new technology is available or new products are available. It may be the case new competitors are there in the market over there. And ultimately if this particular thing is not dealt properly, it will lead to product death and death over there, right? So you do require to do the fine tuning to the product. You must be evaluating some extra features to the same, right? And it will be basically be having a continuous acceptance, otherwise not, right? Now let's have a look at the type of bank product. First of all, when we talk about the bank product over there, we are having two type of products. One is related to the core products, other one is related to the augmented products over there. So whenever we are talking about the core products, these are the products define kind of business, which are defining the kind of business. Like if we talk about the core products, we are having the saving fund accounts, we are having the current accounts, we are in the recurring deposit accounts, or we can have say about the CC limits, overdraft, housing loan. These are actually what? These are actually the very core products of the business over there, and these are actually never do require hefty marketing because people are already aware to these particular things over there, and these are basically having a very long elongated maturity stage, and further they particularly have a very good stage over there because they never, the need and demand for these products never decline in such a manner, right? So these core products are essential, and further they do not require strong marketing content over there. They are having a very strong life in the growth stage over there, as I told you, right? The second type of products are the augmented product. Now those particular products which are developed by joining or combining two or more core products over there and adding value to the product over there, that's actually the augmented product over there. Like let's say the case that you're having a core saving bank account with ATM bank facility or checkbook facility or auto sweep facility, that is actually the augmented product over there. That's, it's a combination of two things. It's combination of two things, right? So it's an augmented product over there. That's a combination of two or more core products over there, right? And further, you're also offering other kind of value-added services along with it, like you're offering the check services, you're offering the mobile application access or a group of health insurance access along with it. So these are the different type of products. If we look about the bank, that's related to core product and the augmented product. And further, if we look for the type of product in retail banking, we are having the deposit products, we are having basically the credit products. Now deposit is basically related to the liability product, and credit is actually related to the asset product over there. And if we look for the other products and services, like we are offering the lease hiring services, we are offering the fee based income services or bank guarantee or something like that, right? Those are actually covered under the other products and services over there, right? So first of all, it's related to deposit product. Now if we look at the deposit product, we are having the demand deposit. Like under the demand deposit, I have already conveyed the idea to you that we are having this CASA, that is a current account, saving account over there. It's quite important because over these demand deposits, the bank is paying a very little or no interest rate to the customers. So it's actually very much important to basically have a very good demand deposit over there because lesser volatility is there and lesser cost is being paid by the bank over there. So that's quite beneficial for the bank. And if you look for the term deposit over there, the deposit which is available for a longer time, also the volatility is lesser in this particular scenario. We are having the RDs, that is a recurring deposit, or we are having the fixed deposit, that is FDRs over there. So that's the scenario related to the deposit products over there. And if we look at the features of the saving deposits, definitely you can basically be the deposit is intended for the long term. Loyalty is very much good in this particular scenario. People are not tend to basically changing the saving deposit on day to day basis over there. And further, saving deposits do earn interest, whereas the current account deposit never earns interest, but the saving deposit do earn interest. And further, it basically encourages the saving, it basically cultivates a habit of saving among the people over there. And these are saving deposits are generally considered safe because the financial regulations are there, and DICGC insurance is there up to rupees 5 lakh for per account over there, as you are already aware. That particular insurance is also there, so this is considered to be safe, right? And for the some saving accounts may be having the minimum account balance requirement associated with the same, but not with each and everything over there. And further, it will be the case some additional benefits may also be given to the persons over there. And further, it's related to BSBDA, that is basic saving bank deposit account. Now actually in 2020 in 2012 over there, in 2012 over there, as per the Reserve Bank of India guidelines, banks were actually advised so as to open BSBD account. Now BSBD account will be the minimal facility account which will be offered to the customers over there. And further, it will be having all the features or the banking services features of a normal saving fund account. And further, there is no requirement for the minimum balance to be maintained in this particular scenario, and there is no limit for the number of deposits that can be made in a month over there. But there is a limitation related to number of withdrawals, and it is limited to 4 withdrawals a month, including the ATM transactions. Now even if you are withdrawing through the ATM, that will be particularly included. And further, you can be withdrawing maximum for 4 times in a month over there, right? And further, the BSBD account, you have to maintain the KYC guidelines are to be fulfilled. And further, if you're a BSBD account holder, you are not eligible to open any other saving bank account in the same bank over there. So in the same bank, you can be having just a single BSBD account. It's not the case that you are having the multiple accounts, or you were previously having a saving fund account and you're opening a BSBD account. So even if you were previously having a particular another saving fund account and you opened BSBD account, in that scenario, you will be having 30 days. You'll be be having 30 days that you are to close that particular account when you are opening a BSBD account. So from the date of opening of the BSBD account, you have to close the other saving fund account in the same bank within 30-day period over there, right? And further, after that, it's related to small accounts. Now, the definitely, as I told you, that KYC guidelines are to be fulfilled and customer due diligence is to be done, that is CDD is to be done. And in that scenario, the OVD, that is the official valid documents, are to be submitted. There are 5 OVDs prescribed by the RBI as per the KYC guidelines over there under the section 35A of the Banking Regulation Act. And further, in many of the cases and many of the scenarios, it has been further looked that many people are not able to submit, or they are not having the OVDs with them, right? So even though they are not having the OVDs, they are particularly given a right that they can be transacting the banking business. And further, the small accounts may be opened for such an individual, right? So small account can be opened on the behalf of self-attested photograph and for the affixation of signatures or the thumb impression upon the same. And further, you can be opening a particular account over there. But let me tell you that the aggregate credit, total aggregate credit in a financial year, that cannot be going beyond rupees 1 lakh. So maximum aggregate of all the credits can maximum be up to rupees 1 lakh and not more than that. And maximum withdrawals, aggregate withdrawals or transfer in the month particularly, cannot be more than rupees 10,000. So maximum credit in 1 year is particularly limited to rupees 1 lakh, and maximum withdrawal and transfer in particular month cannot be exceeding rupees 10,000 over there. And balance in this particular account, that is a small account over there, at any point should not be exceeding above rupees 50,000, right? So these are the limitations related to it. So related to aggregate credit, the limit is rupees 1 lakh. Related to withdrawal per month, limit is 10,000. And further, the total balance or balance at any point at a particular time shall not be exceeding 50,000 over there. And further, as I have told you that this is a limited account, so the foreign remittances cannot be permitted. These cannot be permitted in the small account when you have not completed your KYC. So if once you have completed your KYC, only after that the foreign remittance can be permitted. Otherwise, the foreign remittances cannot be permitted in this particular account. And normally and generally, the small account is actually valid for a period of 12 months. Let's say case the person A visited, the person A is not having OVD or officially valid documents with him. The person will be actually be affixing a photograph with the thumb impression upon the same, and further will be testing the same. On basis of the self-declaration, the account will be opened, and this account will be operational for the first 12 months. And further, between these 12 months, the person is to submit the proof of particular applying the OVD, that the person has applied for the OVD. Only after that, the 12 months, the person will be allowed for another 12 months. That's a small account is actually valid for a maximum period of 24 months and not more than that, right? And further, if proper KYC documents are not submitted within a period of 24 months, then in that scenario, the account shall be freezed and account will be particularly be we can be saying blocked in that scenario. And the small account can be opened in only such banks which are actually CBS, that is a core bank solution system is available, and for the all the branches are linked to each other. Only in that scenario the small account can be opened, but for the otherwise the small account cannot be opened. Further, it's related to interest rates in saving deposit accounts. So RBI actually deregulated the interest rate. What do you mean by deregulation? That previously whatsoever the interest which will be paid by the bank to the customers, that was regulated by the Reserve Bank of India itself. But now RBI said no, we are not going to regulate the interest rate. You have to decide yourself that what interest will be paid by your bank to your depositor. And those guidelines were given by the circulars of DBOD, and further that was on the 2011 over there in 2011, right, in October 2011. And what were the condition? That comprehensive policy must be there. A bank must be having a comprehensive policy related to that what interest rate will be paid on the deposit, and that must be duly be approved by the board of directors of the bank over there. And further, it's not the case that we have deregulated the interest, that you can be paying any interest to any person, or you can be discriminating between the different persons over there. That must be uniform across all the branches, and further that must be uniform across all the customers, so that there should not be any discrimination. And further, the rates shall not be subject to negotiation between the depositors and the banks over there. And further, each bank is to pay a uniform interest rate to the customers up to a deposit of rupees 1 lakh. And further, above rupees 1 lakh, a special discount, a special interest rate can be paid if the deposit is exceeding above rupees 1 lakh over there. In that scenario, the bank may be having the discretion that what interest rate is being offered by them, but they must be ensuring it should not be the case that if one person is negotiating and the other is not having basically the help to negotiate the interest over there should not be discrimination in that particular part over there. And further, the scheduled commercial banks are advised so as to calculate the interest rate on saving bank account on daily basis, that you on daily basis you have to calculate the interest rate in the accounts over there. That was particularly not available before 2010 over there, but from April 1 2010 that particular decision was taken that you have to calculate the interest rate on daily basis in the saving fund accounts, right? And further after that, it's related to current deposits over there. Now, in case of current deposit, whether you're a businessman or individual, and further you do require a high priority and you do multiple or hundreds of transaction and frequent payments and withdrawals are to be done, you can be opening a current account. The benefit of current account is that you will be getting a privilege. You'll be getting a privilege during the for these particular transactions, and further you can also be availing a overdraft facility in that particular account over there. But you won't be paid any kind of interest for the same, so there is no restriction related to number of withdrawals and number of transactions over there. Overdraft facility may be available, checkbook facility will be issued, and further RBI directives actually prohibit payment of interest rate. That's not related to that banks are not paying on their own will. Bank may be paying on their own will, but RBI has prohibited that you cannot be paying interest rate to the current account holders without the approval of the Reserve Bank of India, right? And after that, it's related to term deposit. As I told you, it's related to fixed deposit or the recurring deposit. Now, the tenure of the fixed deposit can be ranging between 7 days to 120 months. That is up to 10 years over there. And if we talk about the recurring deposit, the individual will be depositing a fixed amount of money in the account on a regular interval, let's say monthly typically, and for the there is a predetermined time for the same. And also the flexi RD scheme is there where the person can be depositing the up to 10 times of the core amount of the recurring deposit over there. So different type of things are out there and you're already aware of the same, right? Now the combination of deposit scheme can be there, like it can be the case that, as I told you, that a augmented product is there, like a saving account with the auto sweep facility. Auto sweep means what? That whatsoever the amount, that's the case, the auto sweep facility amount was 25,000. Now whatsoever the amount above rupees 25,000, that will be converted into FDR, and for whatsoever period the amount will be maintained, you will be getting interest of FDR for that particular certain period over there. Okay, so that's a concern related to. And for the this is kind of augmented product that is available. And after that, it's related to KYC guidelines. Now, KYC guidelines have been given by the Reserve Bank of India by using its power under the Section 35A of the Banking Regulation Act. Now, the banks are actually to maintain the KYC of their customers, that is related to the know your customer guidelines are to be completed. And further, there are different pillars related to the same, and there are four pillars which are to be basically taken care of. First of all, it's related to CAP. Now, CAP is actually the customer acceptance policy. Now, what customer can be opening the account with bank over there? Now, only the real customers and further the natural customers or legal customers can be opening the account with the bank over there. It's not the case that the beneficial owner can be opening the account. It's not the case that A on behalf of B can be opening the account. A on behalf of B can be opening account. That's not actually allowed, right? So there can be no any Benami account which cannot be opened. There's no procedure for the same. And further, the CAP actually helps the bank that what type of customers can be doing the business with the bank over there. It basically outlines the criteria, the guidelines, the processes related to that by which the banks are going to accept the customers and establishing the business relationships with them. So it will be setting up the parameters for the same, factors for the same, related to risk profile of the customer, related to reputation of the customer, and etc. related to it. So it's a customer acceptance policy. That's the first pillar. The second one is related to the risk management over there. Now, definitely the different type of persons are having the different type of risk associated with them. Let's the case that there is an individual who is receiving a monthly salary of 10,000 each and every month, and further that individual has opened an account, and further there is a let's say politically exposed person. There's a politically exposed person who has opened an account with you. Now, in that scenario, which account will be having much more risk associated with the same? Definitely this account is having much more risk associated with the same. And further, this particular risk management process is continuous process. It's not the case that you have, particularly once the banker customer relationship is actually established, you won't be doing the risk management over there. Risk management is a continuous process, and further there are different guidelines for the same, that based upon the different type of pattern of the transaction based upon the profile perception over there. You are to classify the account, and further you must be assessing and further managing the risk associated with the accounts over there, with their transactions over there. And further you will actually be categorizing the account, let's say, as a low risk customer or medium risk customer or the high risk customer over there. And further there is periodicity by which you are to basically renew the documents. Like in the case of a low risk customer, it is after 10 years you have to renew the documents. In case of a medium risk customer, it's 8 year. And for the in case of high risk customer, it maybe 2 years or maybe lesser than it, right? So that is actually related to periodicity for the same. And the third pillar, it's related to CIP, that is a customer identification procedure. Now it's related to what, when we are talking about the customer identification procedure, that is related to CIP, we actually concerned about the establishing and verifying the identity of the customer. Now the customers will be submitting the OVDs, that is officially valid documents, or the other documents which are prescribed. And further the banks are to verify and further establish the identity of the customer. They must be doing the background check. They can be asking for any supplementary information also. They can be checking the contact information. They can be utilizing the identity verification tools or the other databases over there. That's a customer identification procedure over there. And the fourth one, it's related to monitoring the transaction. It's not the case that you have established the banker customer relationship and it's all done. No, whatsoever the transactions are being actually transacted by the customer with the bank over there, you are to monitor those transactions. You can be taking the help of data science or data warehouse or particular data mining techniques over there, or even big data over there, so as to analyze the patterns, so as to find out any anomaly if it is present over there. And further you have to report those all the anomalies. You are to report all those anomalies to the Reserve Bank of India, and that is to be done, right? And prompt action must be taken, and it will be helping the bank so as to basically tackle the money laundering, so as to tackle the terrorist financing or any other illegal activity out there, right? So these are the four pillars: customer acceptance policy, risk management, customer identification procedure, and the monitoring of transactions. Now after that, let's have a look at the methods for opening the accounts in banks over there. First of all, it's related to the private and foreign banks. If we talk about the private and foreign banks, they're having a centralized system. Now when we're talking about the centralized system, let's in the case of the vertical system, same system is actually deployed. Now when we're talking about the centralized system, let's say case that there is a branch A, branch B and C over there. Whenever the customers will be visiting the branch, particular account opening form will be get signed by the employees of ABC branches respectively from the customers, and they will be submitting and further navigating that particular forms to the centralized system or the vertical system over there, where each and every step will be done and for the final account will be opened. That particular process is taken care in case of private and foreign banks, where the opening of the deposit account is done by a centralized liability processing center over there. So application detail and all the supporting documents are actually scanned and further forwarded to the centralized system, where the account will finally be opened. And further the bank's priority is the centralized system perspective over there, because it ensures the consistency. It ensures the consistency of the document and also the efficiency of the branches over there, right? And in case of the public sector banks, it may be the case that centralized system may be there or the branch level approach can be followed. In case of branch level approach, that you'll be actually be obtaining the account opening form from the customers, and further you'll be opening the account of the customer at the branch level itself. And further that's a simple branch level approach. And further also the centralized approach may be followed by the public sector banks also, right? So both approaches can be followed, right? And further in that scenario, once you're opening the account, you're issuing the debit card, credit card, or other things, or issuing a checkbook over there, all things are done and being managed by the branch level itself. And it may also be the case that those all things are being managed at the central level itself. So there are two different perspectives how the public sector banks are working, right? And further now let's have a look at the credit products. Now when we're talking about the credit products, we're talking about the asset side of the products over there. We are talking about the lending part of the bank over there, like consumer loans are there, the mortgage loans are there. Now when we're talking about the mortgage loan is actually long-term loan we are talking about, where we actually create a charge on the mortgage, like a equitable mortgage property charge is created or any other equitable charge is created over there, right? Or that particular charge will be created on the immovable property, and further the loan will be sanctioned, right? And further it may also be a auto loan, where the loan will be sanctioned for purchase of two-wheeler or four-wheeler, right? And further it can be for the new car or for the secondary car, or particularly for the old car over there, right? And also the overdraft facility may be granted, like you're having a current account with the bank over there, and further whatsoever the amount that was present in your account, you were given a overdraft limit. Let's say case that you were given an overdraft limit of rupees 1 lakh, even though you were having a credit balance of 30,000 in the your account, you were having 30,000 credit balance in the account, you can still be spending 1 lakh 30,000 because you're having a overdraft limit of rupees 1 lakh over there, right? So that's a scenario can be there. Or CC limit can be sanctioned. Now in case of CC limit, there is a sanction process related to, let's say that there is a limit, that is a sanction limit, and also there is a DP limit, that is related to what? DP limit is actually related to what? One is related to sanction limit, and the other one is related to the DP limit over there. That is actually related to drawing power. Let's say case the sanction limit is rupees 5 lakh, but as per the norms, you have to maintain a average amount of stock of rupees 10 lakh, but you are not able to maintain so, and you are maintaining a stock level of 7 lakh rupees only, and based upon that you are allowed to maximally drawing amount of rupees 3.5 lakh instead of rupees 5 lakh. Now this is the maximum amount that you can be withdrawing right now, but your maximum sanction amount is 5 lakh rupees over there. Okay, so that's the difference between the DP and the SL over there, right? And further that, other than that, the other services are there, that the remittance services are being offered. The banks can be doing the RTGS, NEFT, IMPS, etc. Fee based services are being offered, like a collection of checks, safe deposit lockers, standing instruction facility, or other facilities over there. And other fees based facility or parabanking services may be allowed, like banks are emerging into the bank insurance products, like they are selling the insurance products, they are selling the mutual funds, and for the other things also, right? So these are the different type of products which are being offered by the banks over there, right? And after that, it's related to the new product development. When we're talking about the new product development, there are 7 stages involved in this particular process, and it refers to what? That we want to create the idea related to same, and further those ideas will be screened, and a new product will be developed based upon the same. We'll be testing that product as a pilot testing project over there, and further we'll be getting the feedback from the customer, and any changes are to be made, we'll be fine-tune the product over there, and ultimately the product will be commercialized, and there'll be commercial launch of the new product in the market over there. So different stages are there in the new product development, and we're having the 7 stages in the same. First of all, it's related to idea generation. Now there is actually idea generation is related to, it can be generated through the brainstorming, it can be particularly as a feedback from the customer, it can be in-house production, or particularly in-house generation means that our employees have given us the feedback, that they have given the suggestion related to that we are facing these issue, and we are looking at that the customers are facing this issue, and we can be refining the same. That's related to idea generation process over there. And once the different ideas have been generated, it's a process related to idea screening. Now we will be evaluating the different ideas, and we will be screening the different ideas. We will be checking their viability and market potential and alignment with the company's main objectives over there, and we can be narrowing our search. It, let's say case the total ideas generated were 21, and we basically narrowed it down, and further we found the 3 ideas only which are basically are viable, which are market friendly, and which align with the company's objective over there, right? And further, that's related to idea screening, and after that it's related to concept development and testing. Once your idea has been screened, now you'll be doing what? You will be developing the product based upon the same, the selected idea. You'll be developing the product, you'll be looking for the basic features, attributes, target market for the same, and further now you will be pilot testing this product project. That's the case, that you will not be launching it in full search, but you'll be testing this product with the potential customers out there, and you'll be getting feedback from those customers. You'll be getting the feedback from those customers. That's actually related to the third part, that's the concept development and the testing. And the fourth one is related to BAMA. Now BAMA is actually related to business analytics and the market analytics over there. Now you'll be analyzing the financial viability of the product over there, you'll be looking for the business potential of the product over there, you'll be looking for the different thing, like what is the production cost, what is the pricing, what is the market size for this particular product, what is the competition which is available for this product over there, and you'll be determining the different factors related to the same, and we'll be looking for the profitability of this particular product over there. So that's actually related to business analysis and the market analysis, that is BAMA, right? So the first stage was actually related to, let me just write it down. So it was related to the idea generation, where you will be generating the idea. The second one was related to the idea screening, where you'll be screening the ideas, we'll be checking for the viability of the ideas over there. The third one, it was related to the concept development and testing, that you'll be developing that particular concept over there, you'll be doing particular testing on that particular part, and we can say testing part over there. Fourth one, it's related to BAMA, that is the business analysis and the market analysis over there. It's not the case that your customers are giving a good feedback and you'll be launching product. You'll be checking the financial analysis is to be done, market analysis to be done, right? And further, the fifth one, it's related to the product development. Finally, you will be developing a new product that basically you have already checked the feasibility of the product, and actual development process will start related to it. Now it will be related to designing of the product, engineering of the product, and so as to develop a new prototype for the product over there. You'll be conducting the tests for the same, you'll be looking for the quality assurance over there, and further whatsoever the modifications were to be made, that will be done in this particular part, that's related to product development. And further, the sixth one, it's related to market testing. Again the market is to be tested over here, that's related to the new product will be launched in a specific test market over there, so to the specific target audience over there, so as to check its performance and so as to take the feedback if fine tuning is to be done further. And the last but not the least step, that's related to commercialization, that commercially now launching our product. So the first step, it's related to idea generation, second idea screening, third concept development and testing, fourth business analysis, market analysis, fifth one product development, sixth one market testing, and seventh one commercialization is to be done, right? So that is actually related to these particular steps over there. And now what are the different hurdles or different constraints which are faced in case of the new product development? Definitely heterogeneity is one of the major thing. Now the customers are not homogeneous, their needs are different, their desires are different, their wants are different, and it's quite challenging so as to develop such a product which will be satisfying all the customer needs. That's the first issue. The second one, it's related to, it may be the case that you have developed a product but it may become obsolete due to the technology revolution, right? And the third one is related to existing product range. It may be the case that your wide range of products, the existing products, may be imposing a particular challenge to the new product development over there, and you need to focus on all the products right now where you are basically focusing on previously limited number of products over there. So that's also a hurdle. Fourth, it lead to idea to product conversion. Now basically it may be the case that I basically have generated a lot of new ideas and very innovative ideas, but how viability is there, how come I can be changing those ideas into reality? That's also very important and very difficult task that must be looked into. And staff resistance, when you are basically going through a change or innovations are to be made, staff may not be that much, let's say, aligned to your changes or to your objectives. There must be some resistance that you can be looking further, right? It may be the case due to the increased workload, it may be due to the job security or relocation, right? So these cases must be there, and these are the different constraints which are being faced, right? And further after that, it's related to product management. Now when we are talking about the product management, it's actually related to that we want to manage the different type of products. We want to manage the different type of products, so the right product is actually created and being offered to the to deliver the customer needs, right? Basically, let's say case I'm having 100 products, I want to basically manage those products, and further it means what, that I want the different products to be created and further want to deliver those products so as to cater the customer needs over there, and also so that I can do achieve the business objectives over there. That's the product management over there. Now there are different types of products. One is related to generic product. Now generic product is actually related to the core product, that at the core of this particular thing, this thing is there. That's a core product over there, right? That like a undifferentiated commodity. Like if we look for the saving fund account, now saving fund account, we can say it's a generic product, like because it's a saving fund account in HDFC Bank, it's a saving fund account in PNB Bank, it's saving fund account in SBI, or even any cooperative or RRB bank over there, right? It's the same thing over there, right? So this is actually the foundation. We can say this is a foundation of the bank. Now when you'll be basically adding some add-ons to it, when we will be adding some add-ons to it or some features to it or minimum features to it, I will be saying minimum features to it, it basically becomes a expected product. Okay, so if I talk about the saving fund account, it's a very generic thing, but if we, let's say, talk about a international saving fund account of the Flana bank, or XYZ bank over there, right? In that scenario, it may be the case that there are some minimum features associated with this particular account over there, and that will become what, that will become the expected product, that the this account or this particular product must be having these minimum features associated with the same. Like these days everyone wants a saving fund account comes with the personal accidental insurance cover. Everyone thinks that saving fund account comes with the debit come credit debit come debit card over there, right? And for everyone basically thinks that particular saving fund account comes with the checkbook facility over there. Also, this is actually related to the minimum expectancy. I want this actually minimum services to be involved in this particular part. That's the expected product, right? And further, it's related to augmented product. Augmented product means voluntary enrichment of the product. Voluntary enrichment of the product. That giving something extra. Giving something extra that will be differentiating between your product and the other products over there, right? Like let's say that if we are giving a particular health insurance with this particular saving fund account, that will be augmented product because we have enriched, we have value added to that particular product over there. That's augmented product, right? And for the potential product, what do you mean by potential product? If I can be adding something extra to the top of the same, that the future possibility of that particular product over there, that will be a potential product. That will be a potential product. Now it will be related to involving suggestions, ideas, redesigning existing products, etc. That will be a potential product over there, right? So if we look for the different type of products from that particular side, it's related to generic product, it's related to expected product, augmented product, and the potential products, right? And further, it's related to product policy. It's related to the product policy. Now, what do you mean by product policy? Product policy basically includes whatsoever the different things are being offered by the company over there, by the bank over there, how they're offering, what are the different features of the same, what is their position, how they're differentiated from each other. Okay, if I say that this particular bank ABC is offering the saving fund account, and there are two types of saving fund account, SF1 and SF2. What is the positioning of SF1? What is the positioning of SF2? What is differentiating between these two? And further, based on the different preferences of the customers over there, so what is the policy for of the bank? What is the policy of the bank for these particular products? That will be related to defined under the product policy, right? So appraisal of the product line and individual products, that's the first part related to the product policy, that involves evaluating the existing product. Like if you're having a wide range of the products, like you're having a very good product line over there, in that scenario, what's of the different products over there, you must be evaluating the different products involved in the product line over there, and individual products which are being offered by the bank over there. We must be assessing their performance, we must be looking for their profitability, a customer demand for the same, alignment with the market trends over there. Now whatsoever the gaps found there, or whatsoever the loopholes over there, we must be looking for the same, and we must be looking for the areas of the improvement in the product portfolio. That's related to the first part. That's related to appraisal of the product line. That's related to appraisal of the product line, that this is my bag and I'm having 100 different products. I'm having 100 different products over there. So I must be analyzing, I must be evaluating these particular products, must be looking for goods and bads, and further if there is any area for improvement, I must be looking for the same. That's related to appraisal. That's related to the appraisal process over there, related to appraisal of the existing product or products in the product lines, right? And further, it's related to decisions on product differentiation. Decision on product differentiation. Like I told you, under the same category, I'm having under the saving fund account category, I'm having the different type of accounts. I'm having SF1, SF2. Now, what are the different features which are differentiating between these two products? What are the different things which are differentiating between these two products over there, and how your products are being different from the products being offered by your competitors? That one, it's related to intra products difference, and the other one is related to inter product difference, that how your product is actually different from the competitor product over there, right? And for the third one is related to product positioning. Product positioning is actually related to defining the target market over there, right? Like this is my target market, and in this product market I'm going to offer this product. Under the secondary market, I'm to offer the second type of product over there. That's related to product positioning over there. That is actually to determine that how product is going to be positioned. Different products will be positioned in the different markets, and how my product is will be positioned among the products of my competitors, right? And further, it's related to product branding. That's also now a part related to the product policy over there. Product branding is actually related to like the name of the product, the logo of the product, or the brand value associated with the product over there. Like let's say case Mitra account, which is actually a product brand related to PNB account over there. That's related to Mitra account over there, right? So that's related to product branding, right? And that how particularly one product was branded. that how particularly one product was branded. Now let me just tell you very good fact related to it. There was a company, basically when we say photocopy, we also say get it Xerox. Get it Xerox. We also say it. Whereas Xerox is actually not a name related to photocopying. It's related to a name of company. It was so popular that it became a brand, and further it basically became synonymous to what? Synonymous to photocopying over there. Same way, the different banks do play in this regard, that they do launch a product and further they do give it a name, and if that product is a hit, that will become a generic perception in the product, in the customer's mind, that this is a product which is actually being offered over there, right? That's related to branding over there. Further, it's related to decision on packaging. Let's say case if a saving fund account is offered, now design related to the debit card or design related to the passbook, that's related to the designing and packaging. And further, new product development actually refers to creating a new product, introducing a new product in the market or the new service in the market over there, right? Now there are different 7 stages. I've already told you that related to idea generation, idea screening, and all the things, we have already covered those 7 steps, so we can be looking for the same. So that will be all related to this. So the last topic was related to product policy, and all the things have been covered so far. I hope that you must have liked the video. So do rate this video out of 10, and further do let me know that how did you like this particular video, and further do like this video and share this video among your friends and colleagues. Get your referral link, and you can be getting your referral link simply on sign up. Just visit the website jaib.learningsessions.in. So simply just do visit the website jaib.learningsessions.in, and further on sign up you'll be getting a referral link, and through this referral, if any of your friends do join, you'll be getting rupees 20 for each sign up, and further if they do enroll into any course, you can get up to rupees 500 for the same. And further, you can also be, rather than basically sharing the link with them, you can also giving us their number. You can submit their numbers on the portal itself, on the referral page itself, and we shall be sending the messages to them on your behalf related to the courses and the products over there, which will definitely be helpful to them. And ultimately when they sign up, you'll be getting the money associated with the same, right? So that will be all. Thank you so much, and see you again in the next video.